Let's dive into Netflix here real quick. And actually, what we'll do is we'll start with the chart and we'll start with some kind words here, too. I don't often get this, but let's do it. Eric says, Ryan, you called this yesterday. We all should have been short Netflix. Now, indeed, the move down was called here. We actually talked about 70 being really a key level. And then the next level is really $63. So something else to look at here today. Oh, sorry. Let me zoom back out on this chart. Here's one of the big concerns. So we do have kind of this janky looking head and shoulders. Not the best, but with all of the problems that we've seen at Netflix and the poor earnings here, it looks like this is trying to resolve lower. Again, I think 63 is going to be your next possible support spot, but I'd be interested in the group for any other levels that you folks are looking for. If I recall from memory, which is not easy for me to do, we had a couple of folks yesterday say that they were looking at obviously 63, but then also 60 and I think 55. And I think one of our very, very patient happy hour members is even looking for like a 35-40 handle on Netflix for that potential buy spot. But this is what the chart looks like. Looking at the volume profile here, again, top end of this big node right at 63. And I think that this node pretty much consumes 60 to 63 before we get to that low volume node beneath it. So we'll see where we end up finding some support here on Netflix, but let's actually go over the report itself and then also some of the comments that were made there. So Netflix here, ticker NFLX, reported second quarter revenue of $12.56 billion. That's up 13% year over year. The revenue total missed a street estimate of $12.59 billion, and that was according to data from Benzinga Pro. Now, revenue by region is broken down as follows. UCAN, or the US and Canada, saw $5.43 billion, and that was plus 10% year over year. EMEA, which is Europe, Middle East, and Africa, saw $4.03 billion. That was higher by 14%. LATAM, or Latin America, was $1.58 billion. That was plus 21%. And APAC, which is Asia Pacific, was up came in at $1.51 billion, up 16%. The company said its revenue was solid and that it is on track to meet its objectives for the year. Second quarter earnings of 80 cents per share beat a street consensus estimate of 79 cents per share. Netflix said it's delivering value to members and seeing strong engagement. This includes view hours being up 2% year over year in the first half of 2026, despite being up against the Winter Olympics and the World Cup. That's actually kind of an impressive stat. The company highlights live programming to make up around 5% of its content spend for 2026 and around 1% of view hours. Live events are said to account for 6 of the top 10 new member sign-up days over the past 5 years, with live events beginning only in 2023. And I want to pause right there real quick because this is one of the things that I was saying that was going to be interesting. We talked around Christmas last year when Netflix started to play NFL games that, hey, you know, I'm someone, just from using my own example here, I'm someone that really doesn't see any value in Netflix. I've never really had a subscription. I don't really feel like I'm missing anything, and I don't care until they put the NFL on Netflix. And then all of a sudden I'm buying it for the month to capture those games. So this whole live events thing beginning in 2023, clearly the company sees room for growth here. Really the question for me is, are they going to be able to execute this? We've discussed a lot of the content problems at Netflix, and I don't know that we're necessarily out of the woods there, although I will say that going towards live events, and particularly sports, is probably a good move here for Netflix. But I digress. Advertising remains a key for the company, with Netflix on track to have over $3 billion in ad-related revenue for 2026. The company said it's seeing advanced U.S. upfront negotiations and live events lineup as it highlighted as strong interest. Netflix is guiding for third quarter revenue of $12.86 billion. That's up 12% year over year. The company said the quarter is expected to see growth in memberships, pricing, and advertising revenue. The street estimate for the third quarter revenue is $13.01 billion, and third quarter earnings per share are expected to be 82 cents versus a street estimate of 84 cents. Netflix did, however, narrow its full year revenue guidance from a prior range of $50.7 billion to $51.7 billion to a new range of $51 to $51.4 billion. The street estimate is $51.41 billion. So they just missed that street estimate. Now, continuing with Netflix here, one of the other things that got discussed here is what's next for Netflix. Not easy to say. Netflix becoming the next YouTube? I would say pump the brakes on that headline statement. But CEO Ted Sarandos says podcasts, creators, and vertical video are all part of the plan. Now, I want to know from you folks, do you think that this is actually going to work? We actually briefly talked about YouTube viewing habits yesterday, and a lot of us, it seems, correct me if I'm wrong, but it seems a lot of us really don't necessarily think about going to YouTube when we go to our TV. It's normally something else, unless I guess you have YouTube as your TV service. But some of these creators, seems like, at least in my case, I watch that a lot more on mobile and computer, not necessarily on the television. I'd like to get your opinion on all of that. Netflix wants subscribers to do more than binge watch, with co-CEO Ted Sarandos on Thursday outlining the company's expansion into video podcasts, creator-led programming, and vertical video and lifestyle content. Speaking at the company's second quarter earnings call, Sarandos said Netflix's move into newer formats builds on how entertainment consumption has evolved over the past decade. Quote, over the last 15 years, the definition of TV has broadened and our definition has changed along with it, end quote. He added that Netflix has evolved from a platform built around scripted English language dramas into one that now includes local language programming, live sports, unscripted shows, games, video podcasts, and creator-led content, describing those additions as, quote, evolutionary, not revolutionary, end quote. Netflix was seeing early progress with mobile vertical clips and strong engagement from video podcasts, which Sarandos said was bringing members to the platform outside of traditional primetime viewing. The streaming company has been building a mix of owned and licensed podcasts featuring creators including Martha Stewart, Kate and Oliver Hudson, Jay Shetty, Bill Simmons, Pete Davidson, and Brian Williams. Sarandos added that Shetty's On Purpose was available exclusively on Netflix, while members were also tuning into The Breakfast Club and the official Bridgerton podcast. Quote, these are examples of us continuing to evolve and deliver members more entertainment value in more ways to engage with the stuff that they love, end quote. Again, that came from CEO Ted Sarandos. He also reiterated that the streaming giant remains primary builders, not buyers, as investors continue to speculate about potential acquisitions involving Lionsgate, ticker LION, and NBC Universal and other media companies. This is something we have discussed at great lengths here. Netflix, again, reported second quarter revenue of $12.56 billion, which was up 13% from a year earlier, and marginally missed Wall Street estimates of $12.59 billion. And adjusted earnings for the quarter came in at 80 cents per share, which topped Wall Street estimates at 79 cents per share. The streaming company said it remains on track to meet its full-year targets and forecasts its third quarter revenue of $12.86 billion, which represents a 12% year-over-year growth. So I'd really like to get your opinion on Netflix. I know we've talked a lot about the content problem that it seems to have, and I completely agree with that. What do you think fixes it? If you don't like this plan, what do you think the plan should be? Eric says Netflix needs to get into video games. Barb says, I watch Benzinga mornings on my TV. Okay, well, then I take back everything I said about YouTube on television. Keep doing that, Barb. We appreciate you. But again, really curious how everyone thinks about Netflix here and whether or not it's a buy. And if you don't think it's a buy, totally fine. What level would this be a buy for you?